Welcome to the Leaders Insights podcast. Today's episode, IPO readiness, what it really takes to go public without getting burned. Everyone says the hard part of an IPO, going public, is the roadshow, the pricing, the banker beauty contest. You think that's a distraction? Why?
Because by the time you're on the roadshow, your fate's already decided. The companies that get burned don't blow up in front of investors. They blow up in the 18 months before, when they discover their finance function was built for a private company and can't survive a public one.
That sounds like consultant speak. Give me something concrete.
Fine. The close. A private company that takes 25 days to close its books, meaning to finalize the monthly financial numbers, is fine. As a public company, you have roughly 40 days after quarter end to file, and that's the whole quarter, audited, reviewed by a committee, signed by 2 executives who go to prison if it's wrong. If your close is slow, you have no time to actually think before you file.
So it's a plumbing problem.
It's a plumbing problem dressed up as a strategy problem. Look at the WeWork implosion in 2019. People remember the founder. But the deeper issue was numbers nobody could defend under scrutiny. When adjusted metrics need a footnote to explain the footnote, the market smells it.
Let me push. Plenty of firms hire a big-name CFO 6 months out and it works. Why can't you just buy the fix late?
You can buy the face. You can't buy the history. Public investors want 3 years of comparable, restatement-free numbers. Restatement meaning you went back and admitted the old figures were wrong. If your revenue recognition, the rules for when you're actually allowed to book a sale as revenue, changed twice because your first policy was sloppy, a superstar CFO can't unring that. She inherits it.
So what's the actual sequence? If I'm a CFO today, 2026, window maybe opens next year, what do I do first?
First, fix the close and get it under 10 days, boring as that sounds. Second, build the forecast you'll be judged against, because the day you go public, you start giving guidance, telling the market what next quarter looks like. And if you miss it twice, the stock gets treated like a liar.
How badly?
Brutally. A company that misses its own guidance by even a few percent in the first 2 quarters routinely loses 20–30% of its value. The market doesn't punish the miss. It punishes the fact that you didn't know your own business well enough to predict it.
You mentioned software earlier off air. Where do vendors oversell?
The IPO readiness software crowd, the tools that promise an automated audit trail, will tell you 70% of finance teams aren't ready. That's their own survey, so treat it like a barber telling you that you need a haircut. The tools help, but a clean tool on top of a messy process just gives you organized chaos.
What's the mistake even smart CFOs make?
They overinvest in the equity story, the narrative you sell investors, and underinvest in controls. Internal controls, meaning the checks that stop one person from moving money or booking fake sales alone. That's what auditors test. And material weakness, an official finding that your controls could let a big error slip through, is disclosed publicly. Nothing kills a valuation like page 1 of your filing admitting you can't count reliably.
Isn't some of this just fear? Companies stay private longer now, so why rush the machinery?
Because the window doesn't wait for you. Interest rates, sentiment, your sector being in favor, all of that opens for maybe a quarter and slams shut. If your finance function needs a year to be ready when the window's open for 3 months, you missed it. The readiness has to exist before the opportunity does.
One funny thing you've seen?
A company whose board deck and audited numbers disagreed by $8 million. Their explanation? The board deck is more optimistic. That's not accounting, that's astrology.
Give me the one thing to do Monday.
Time your last monthly close. If it took more than 10 business days, that number, not your pitch, is your real IPO timeline.
That's a wrap. Fresh CFO briefings drop daily at mba-training.com.